And welcome back to another episode of the Mining and Markets podcast hosted by Synergy Capital. Joining me today is Alex Horsley, the VP of Corporate Development at Emperor Metals. And for those of you who aren't familiar with the story, the company trades on the CSE under symbol AUOZ. Alex, why don't we start off with a brief description, elevator pitch on the company, and maybe you can start off with talking a little bit about the news that you guys put out today.
Yeah, thank you for having me. Where to begin? We're an advanced stage gold exploration mining company focused in Quebec in the Abitibi. So we have a high grade historical resource of 727,000 ounces of gold at 5.4 grams gold per ton, average thickness of 5.7 meters. And our goal is pretty simple: to take this new AI open pit model and build up a resource of 2.5-3 million ounces of gold and sell the company to one of the surrounding producers, given their proximity to us and their need for additional mill feed.
Right. So yeah, I was just going to get into that. There's, probably about 50 different mines and developing mines in that area. The Abitibi belt is definitely one of the most prolific areas, maybe even in Canada. Can you explain, why this area stood out to you guys when you were looking for projects, and how do you think it differentiates Emperor from other junior gold companies in perhaps other jurisdictions?
Yeah, so 3 years ago when I was putting pen to paper and building this company as the founder, I wanted to focus on gold in a safe jurisdiction. Now, Quebec is pro-mining. This particular area has had 200 million ounces of gold produced. It's one of the most prolific, productive, and safe mining jurisdictions. Next to Nevada, I would say Quebec in this particular district, it could be the best place to mine and find gold on the planet. So for those reasons, we're pretty happy to be strategically located in the middle of this camp, surrounded by producing mines that, as I've said, are going to need additional mill feed. So it's your ideal location.
And taking it back a bit, how did this project get into the hands of Emperor? Was it staked, or did you guys, get it from a vendor? How did it, get into the hands of you guys? And what made you guys want to, take this historic resource and bring it up to NI 43-101 standards?
Yeah, so I was, for a year looking for a good project like this, and I stumbled upon Globex, who's a project generator. They have hundreds of projects, and having gone through their website, this really stood out to me given its resource, its location. We have an option agreement to earn 100% of over the next 4 years with some backloaded cash and share payments. We're pretty happy with it. Gold has gone up, I think, $200 to $300 USD since that time. Yeah, we're pretty happy with it. It's $10 million cash, 15 million shares, and a work commitment.
Yeah, and what is the work commitment like in terms of expenditures?
I think it's approximately 12 million, but in 2023, we already did 2.5 million. So we're already ahead of the game. We could do no work this year, and we would have our commitments done. But we're fully financed with 2.4 million in cash. We can drill roughly 5,000 meters starting March, and then we would like to raise more money, ideally at higher levels, to drill 15 to 20,000 meters, Q2, Q3.
Right. And so you guys did an 8,500 meter drill program. Is that still underway, or is that concluded now?
That was completed, I think, at the end of November.
Okay.
So we're waiting for, I think, roughly 2,000 more meters of that to come. And we also submitted about 3,000 meters of historical cores for assays. The funny thing is, once we really did a lot of data compilation last year, is that we found that somewhere around 70% of historical core from surface to 500 meters was actually never assayed. So it's essentially free drilling. It's similar to the story of Great Bear Resources, where, they had all this unassayed core that had gold in it. And we all know what happened to Great Bear. I'm not saying we're going to be the next Great Bear, but that's a lot of free drilling. Historically, 103,000 meters of drilling was done prior to us. So, ballpark, there could be 50, 60,000 meters of core waiting to be assayed once we log it and prepare it.
And would you say that's, a little bit unusual for companies? Like, how come the previous people that drilled it didn't end up assaying those core? Does that happen?
That's a really good question. This region, explorers were looking for high-grade underground mines. So open pit models were overlooked. But in the last 20 years, there's been, I think, 3 or 4 open pit mines that have gone in production. including the Canadian Malartic mine, which is owned by Agnico, Canada's largest open pit mine, which will transition to the largest underground mine in Canada. So essentially, the previous operators were assaying core that they thought would be high grade. They were looking for high grade underground, so they ignored the core that didn't look sexy. But we can clearly see that there's a lot of mineralized core that needs to be assayed. And we're the first company in this project's history to do full spectrum fire assaying. So we're assaying the entire core. And what we were seeing from earlier cores is we're hitting within that 500 meters, within what we now see is a open pit model halo. So we suspect through 100,000 plus meters of drilling further into this open pit model that there could be 2 to 3 million ounces of gold from surface to 500 meters on top of this existing high grade thick mine.
Right. Cool. I know it's early stages, but like you were saying, there's obviously a lot of producers and developers in the area. Have you guys started to begin thinking of ways that you could, maybe get site visits done from these guys, or, start preparing for maybe a potential future buyout? I know it's, a ways away and you guys have a lot of drilling to do, but is that something you guys have started considering?
Yeah, I mean, I can't really name some names, but there has been some pretty prominent companies in the Abitibi that have done site visits. We've had some very interesting conversations with some particular companies that have been quite advanced for where we're at. We're going to continue to educate the companies in the area, mining analysts and investment bankers, bring them to site and really educate them on this opportunity. And it's going to hit a point where if we can take this resource to 2 to 3 million ounce gold in the open pit halo for the kind of grade we suspect, the stripping ratio, some early meta-analysis that we've done, that I think it's going to come to a point where I think there's going to be a bidding war for this thing. You've got the largest producer of gold in Quebec, the third largest on the planet, Agnico Eagle, surrounding us. Barrick, the second largest producer of gold, just re-entered the district. And you've got Newmont, the largest producer of gold on the planet, to the west, in the Ontario side of the Abitibi. So literally the three biggest producers of gold on the planet are all sitting around us. And they want high grade, they want mineable ounces, and they want things that are going to be economically viable, with gold at $2,000 plus USD and speculated to go much higher. This company was built to capture the right window of opportunity. And I suspect, based on sentiment, that, gold is probably going a lot higher. And I think that there's going to need to be acquisitions to be made to continue having producers produce gold. So they're going to have to look down the food chain. We're sitting there with this deposit. Our management team has sold 5 companies in their past, cumulative $2 billion in buyouts. We know exactly what they're doing. Our CEO, in fact, the last deal he was on was one of Agnico Eagle's now projects, the mine that was owned by Kirkland Lake. This guy increased the amount of gold going through the mill by 20%, resulting in $150 million in added revenue per year for mine life for a new generational mine using artificial intelligence. We're one of the few companies utilizing. I'm kind of running on here, but we're at the heart of the Abitibi, one of the most prolific, productive mining camps on the planet, with a high-grade deposit we suspect could have 5 to 10 million ounces of gold. And every single hole that we put in 2023 is hitting mineable ounces, increasing this resource, de-risking it. So the way things are looking, if we continue to hit like this in this environment, yes, I think we will get taken out.
What were some of the first assays that you guys announced? What were they looking like?
I think the first hole was like 12 meters of 5.63 grams of gold per ton, a good hit. The second release was 10.8 meters of 15.3 grams of gold per ton. That was, okay. I think, 400 meters away from the closest diamond drill hole, so a pretty good hit. Today we put out results. In the open pit halo, we had 2 holes where we hit, albeit it was 15 meters of 0.8 grams of gold per ton, but it's in the open pit halo that we suspect at 0.4 grams of gold per ton would be economic to be in production. So when you're hitting 15 meters of 0.8, those are ounces. That's reducing the strip ratio. We're just drilling in between historic holes. We had something like 3.6 meters of 6.25 grams of gold per ton, another one of 13.2 grams of 3.8 grams of gold per ton. This is all within surface to 500 meters. So our focus on the end of the 2023 drilling campaign was to focus on delineating that new open pit model, which we were able to define close to the end of our drilling campaign. We just got this thing. We didn't know how much core was on assay. We hadn't fully got our heads wrapped around this project. Suddenly, we have an open pit model, which is the quickest and often the most economic mines to take in production, a quick payback. And then on top of that, the reason we got this thing was this high-grade, thick gold mine. So,
well, the timing is definitely good with the price of gold, and that kind of leads into my next question is, investors who are looking to re-enter the gold space, and that's both physical and on equities, what should they be looking at? Is it juniors? Is it producers? Is it physical? And, there's also this disconnect, I feel like, between the price of gold and juniors. And when do you think that will switch?
I mean, it depends on how old you are. I would say it depends on your risk tolerance. For older people, I'd say buy physical gold. I'd buy the top 5 gold producers, and I would be risk adverse. If you're looking down the food chain and looking for, a pure explorer with tremendous upside, Emperor Metals would be at the top of my list, naturally, because if gold continues to go higher, if we get bought out and we prove up 2 to 4 million ounces of gold in the next 3 years, potentially this could be a $500 million plus buyout. We're at a $9.5 million market cap today, provided we will dilute the company and raise more money. I don't know what the share structure is going to look like, at the end of the day, but the potential 30 to 100 bagger, if everything goes right, is there for Emperor Metals. If you want to be ultra conservative and make 50% to a triple, stick to your top gold producers on the planet and go buy gold bullion. But if you're looking for some huge upside, wealth creation opportunity, the technical people around me have been a part of creating those type of opportunities, building mines, taking resource projects, building the resource, selling them to mid-tier, and major producing mining companies. Emperor can be a wealth creation opportunity, but if you want to be really, really conservative, don't touch Emperor. Go look at gold. Go look at Agnico Eagle, my favorite producing mining company that's risk adverse, focus on regional production, safe jurisdictions like Quebec. It really depends on what your goals are and your risk tolerance. But if you're looking for a gold junior with crazy upside, have a look at Emperor.
Yeah. Good answer. Okay, yeah, just to wrap up, can you talk a little bit about the share structure? And I know that you guys recently raised some money. How does the share structure look post?
We have thank you. We have approximately 79,875,000 issued and 106,116,000 fully diluted. The market cap is 9.5 million. Management bought 170 grand worth in the last placement at 10 cents. So obviously we believe this is a good investment for us. We got 2.4 million in cash, fully funded for 5,000 meters to start probably in March. And there's probably around 5,000 meters of assays to come back from the lab still. We should see most of that by the end of February.
Awesome. Well, Alex, thank you so much for your time. And I'm excited to see the next set of assays and you guys move forward.
Great. Thank you so much.
Cheers.
Cheers.